why not go for all out growth? I say all out growth, not like reckless, stupid, meme stock growth.
Why not? But did you have to give up your license to make YouTube?
So you have to surrender your license to go even make a YouTube video.
To even tweet. When you first started YouTube, there wasn't a lot of investing information online. Nowadays, it's almost like there's too much.
You learn from the streets. You learn from doing it.
You learn from the streets.
Literally.
And the streets are rough.
Right? I can imagine. That's why I don't.
There's blood on the streets.
I don't go to those streets. I don't like those streets.
If this is your first time tuning into our podcast, I interview and share stories, trading strategies, and more from some of the most inspiring traders around the world. Our guest today is Beavis, one of Canada's top finance YouTubers and founder of the Investing Academy. Brandon started his YouTube channel with a goal of sharing the investing knowledge he learned while working as a financial advisor in wealth management. In addition to being a full-time creator, entrepreneur, and dad, he's now also a strategic advisor for Blossom, an app that helps Canadians become smarter investors. If you're ready to dive into this conversation with Brandon, please remember to smash the like button and subscribe for more. And we have right over here, Beavis. Welcome.
Hey.
Yeah, we chatted over the years, so for last 3 years, finally we have a video out together.
Well, I remember the first time we met in person at the Starbucks.
Yeah.
I don't know if you remember.
I remember.
And this is back when you said you didn't have too many. You said I don't have any other YouTuber friends, but we ended up being close neighbors. So you were one of my first YouTuber friends, but first podcast for sure. I don't do podcasts very often.
Really, I feel honored. Oh, okay. So we probably have a lot of viewers who don't know who you are yet. So if you could kind of tell people about who you are, what do you do, and what's your involvement in the stock market?
My name is Brandon. I run a YouTube channel. It's probably my biggest online presence. I was actually one of the first Canadians to do it a number of years back. I think it was 2016 or 2017 that I started.
Oh, wow.
So that's like time flies. Right?
Yeah.
I was thinking about that. It's like how many years is that? 6 years now? 6 years.
Yeah.
At least over 5 years. I'm just like, that's quite a while. But yeah, back at the time, there weren't too many YouTubers. There were the big American ones, but not a crazy bunch here in the Canadian market.
Yeah.
And I had pursued a career working with my father in the investment space. So I had all got my licensing, yada, yada, yada. And I'm thinking, this is some pretty valuable information that like my friends should know about. At the time, I was thinking like millennials should know about. And I was like, this might be a good chance to do a YouTube channel. So yeah, that's gone, I'd say, decently well. We're one of the larger like investing focused YouTube channels in Canada. And I would say that's kind of my main claim to fame, if you will, the Brandon Beavis Investing YouTube channel. And now I actually work with my dad. So if you looked at my channel now, there's myself and then my father who now works with me on the digital sphere.
Oh, so before you started making content, you were working in the investment space. Tell us a little bit what you were working on with your dad.
Yeah, so my dad had basically a wealth management firm, an independent firm. So basically you could obviously go, if you want to get your money managed, you can go to the big banks, go work with an advisor. He kind of had his own little practice, if you will. And there's a lot of benefits to doing it on your own because you're not really tied to what the bank tells you to do. You don't have to push certain products, yada, yada, yada.
For sure.
So I did find that attractive. And obviously being my father, there was a good opportunity for me to work there. So pretty early on, I mean, I was licensed when I was 20. Like I was actually got my licensing done by age 20. And I mean, I think a lot of my friends at the time weren't really thinking about that type of thing. So I felt very young. I felt actually out of place at the time, but the plan was to go work for him, kind of learn the ropes. And I did that for 4 years. And it was a good experience. Clearly it helped set my foundation for my knowledge.
Yeah.
Obviously, it wasn't the end goal. His end goal would have been that I took over the firm, right? It's like, I'll raise my son, take over the firm, and
pass it down the family.
And I totally see that too, because like if I had, spent years, he was in the space for I think 28 years before he retired. So he spent, long time building up his business. And I can definitely see it's logical to want to pass it down. Yeah. But I kind of had my own ideas, and I told him very early on, I'm like, I don't know if this is what I want to do. Like managing the firm,
managing other people's
money, and I think a big reason for that was his clientele was quite, I don't want to say old or like old people, but they were certainly older than me,
right?
Okay. And you think now I'm 28, but when you're like a 20-year-old going to sit with these meetings and you're trying to essentially instruct people what to do with their money.
Yeah.
It's such a big age gap. There's like the respect and credibility thing, rightly so. And I definitely felt out of place. And had I stuck to it, I'm sure it just would have gotten better and better.
Yeah.
But from very early on, I was like, I want to come here and learn the knowledge, absorb as much as I can. But then I knew I wanted to go do my own thing. So I think that's kind of the short, brief history there. And then obviously I went and did YouTube after.
So for these kind of more mature and wise clients, what were some of the things you helped them do? Or like what kind of recommendations, what advice were you giving them?
Yeah, good question. So my dad was actually licensed. Basically, it's a bit different now, but this goes back, I guess 7, 8, 9 years ago. But essentially when you're licensed as an advisor here in Canada, you can be kind of like mutual fund licensed or IROC licensed, essentially able to buy and sell securities. So my dad was on the security side, which was actually very, very beneficial for me because like there's a lot of, licensed advisors that, you go to the bank, you go talk to a quote unquote licensed advisor and they just pop you into mutual funds. And really, I mean, with all due respect, some of them don't even know what the heck they're doing. My dad didn't originally when he started, however many years ago, he was selling mutual funds, but he then converted over to being able to build a portfolio of securities. So equities, ETFs. Right. So essentially what he would do is a client would come in, let's say they just sold their business for $1 million, sometimes more, sometimes less. They'd come in with a big chunk of cash. They'd have all their goals, whatever the case is. And my dad would be the one to essentially formalize a plan and then actually invest the money on their behalf. And we did it for the most part, all of individual stocks. So yes, ETFs would be incorporated, but building the portfolio, kind of like what I learned a lot from him was how to manage a portfolio of stocks and how to properly craft and create one. And then obviously monitor it with time because that's so important. And then ultimately what happened, in the later part of his career, he ended up being what's called a portfolio manager. So that is actually a different designation. You have to, get additional. So there's like advisors, then there's portfolio managers. And essentially he ended up crafting up certain funds similar to how, let's say, Kathy Ark has their different funds, right? Ark Innovation.
Kathy Wood?
Okay, sorry. Did I say Kathy Ark?
Well, his Ark Innovation Fund. There you go, man. So, yes. Hey, to all my OG subscribers, do you remember our old friend, Kathy Wood? Don't forget to give her a thumbs up if you miss her. I understand
Kathy
what
Wood, excuse me. Kathy Wood's ARK funds, excuse me, but she has ARK Innovation, yada yada. We had like the BWM Growth Fund, the BWM Balance Fund. Beavis Wealth Management was the
Oh, I see.
Exactly. So then towards the end of his career, rather than managing, let's say, 50 or 100 different clients individually, he was managing set portfolios that people would essentially buy into.
Oh, what kind of stocks or assets are in those portfolios?
Obviously
the funds.
Really good question. Depends on what the objective of the funds were.
I see.
But you would get a lot of overlap. We primarily focused on like long-term big blue chip equities. So not the small caps, nothing too exciting. Because again, you think about what the clientele was. These are people that had just sold their business and, like I said, maybe mid or later in life. And they kind of wanted to be more conservative, if you will. So across the board, you'd hold, the big banks, the energy companies, tech stocks, US, Canada, some international companies, but basically kind of the big popular stocks that you'd see held across everywhere.
Oh, interesting.
Yeah.
Do you remember the first stock you ever bought? Was it for yourself or for your clients?
For myself.
For yourself.
I do, yeah. So it's a fun story. It's kind of part of my story because I bought my first stocks when I was like 10 or 11 years old.
Oh, wow.
Some people don't believe it. Yeah, it's like not many people are buying stocks that early. Obviously, that's a benefit of having a dad who's a financial advisor.
Yeah, wow.
But I do remember that. The first two stocks were Coca-Cola and McDonald's.
Okay.
And I still own them to this day. I'm sure I've sold off portions of them, but I believe in my portfolios, I still own both. But yeah, I remember my dad came home one day. And obviously he's trying to get me into investing, kind of get me just get me absorbed into the space. And he came home with like a big sheet of paper, and it had a bunch of company lists, like company names, tickers, numbers.
On paper? On
a paper, like he printed on a piece of paper. And he sat me and my brother down, and at the time, I'm like, what the heck am I looking at? And obviously, like, in hindsight, what it was essentially just like he was a screener and just had a bunch of stocks that he thought were trading at a fair value or a fair price. It's like companies like Disney, like companies that we would recognize. A lot of them I didn't recognize, but he essentially let us pick what stocks we wanted just to get us involved. Like it wasn't so much to make a great return. And hey, over the years they have made a great return because that was like 20 years ago. But yeah, essentially the stocks that I picked was McDonald's and Coca-Cola because I knew them and I like going to McDonald's, like drinking Cokes, whatever, as a kid, like anyone else. But he ended up buying those for us, like on our behalf. You kind of had like a separate account that was called an entrust for account. So you obviously can't open an investing account when you're like 10 or 11.
No.
But there's a thing called an entrust for account here in Canada. And then when you turn of age, that transfers into my name. And I remember that very vividly because I got a whole bunch of money into my account.
Nice.
It was my money, but yeah, exactly.
So you unintentionally started with dividend investing.
There you go.
With Coca-Cola and McDonald's.
Exactly.
Right? Oh, okay.
Yeah, I sure did.
So now after so many years, so obviously you were 10. So now almost 20 years later, do you still resonate more with dividend investing or growth investing? Or like a combination?
I'd say a combination, but it's funny, like that boring style that was kind of like shown to me at that age is still what I like today. You know, stocks like Coca-Cola and McDonald's are a little bit on the conservative side for me right now.
Yeah.
But they're not out of the realm of what I would invest in. Because I think what the principle of what my dad was trying to teach me was that, you know, when you own stocks as an investor, you really have to think like a business owner. You really have to understand, like, hey, what is these quality companies out there that you can take part in and own? And obviously Coke and McDonald's are prime examples. Even today, like the companies I aim for are like of that caliber, and most of them happen to pay dividends.
Oh, okay.
So it's not that I would ever classify myself as strictly a dividend investor or strictly a growth investor. In fact, when people ask me, like, I would say I'm a hybrid investor.
Okay.
Because I like having components of both. I have a lot of stocks that don't pay dividends, but a lot of stocks that do. And I think like what I was getting at was, by nature, if you're looking at a quality company that's been around for X number of years, a lot of them do pay a dividend. They're at a later point in their maturity and whatnot. So yeah, it's not that I would only pick stocks for dividends, but a lot of them just by nature, like a byproduct, do have a dividend.
Okay.
Yeah.
So how often do you manage your own portfolio now?
Very not often.
Yeah, so you're like a very passive investor.
Yeah. I mean, because I do own stocks, it'd be one thing if it was ETFs. Well, there you go, hands off.
Yeah.
But because I do own, I think about 20 something individual stocks.
Okay.
I do, like today I was looking at the earnings reports for Brookfield, one of my holdings, but more so out of interest sake, right?
Okay.
My goal is to pick companies where I don't have to be looking at them every day. B, I don't even have to be looking at them for when they report earnings. Like if, let's assume I'm going to own a company like Brookfield today, which I actually just bought more of this week. If this is a stock that I plan to hold over 20, 30 years, like realistically 30 years, let's say retirement age, what happens today, what happens this month, what happens next year, for the most part, will not matter. So the more that I can kind of step back and take my hands off of things, the better, in my opinion. That's how I like to structure my investments. So yeah, I'm certainly not looking at it every single day.
Good. Yeah.
That would stress me out.
I invest too, even though I'm a trader. And I would say for most of my investments, I pretty much never
There's no point.
take a look. I don't look at earnings. I do when I'm trading them. Yeah, but for like my
for the
investments,
investment long term,
like,
it's irrelevant unless it's something so material that you're like, okay, well, this is actually going to change something. And at that point, you'll probably hear about it, right? You'll probably hear about it on the news if company's merging with this or that. But if they miss or beat their earnings by X amount, it's like more or less irrelevant for the time frame that we would have as for your long term investing portfolio.
Yeah.
Right? I would agree.
So have you always been like a long-term investor? Have you ever dabbled in trading at all?
No.
Never ever?
No.
Oh, wow.
It's so funny because I know so many people when they come to the stock market, that's the first thing they go to.
They usually start with like swing trading or something.
They usually start with trading. That's what draws them in, like that quicker cash. And maybe that was just due to my dad getting me started so young. Like if you think about it, at 10 or 11, I was already being primed to just buy and hold.
Yeah.
Right? Buy a company, buy and hold is boring. I'm not like... I like doing fun things. Like I like speculating in many other areas of my life, but never the stock market. That was never an interest for me. I'll go to the casino. I'll sports bet. I like doing sports gambling. Like I have my fun and I definitely gamble in certain areas, but the stock market has just been like sectioned off where it's like, that's just not where I do it.
That is so funny because I've never gambled in the casino before.
Yeah, you do in the stock market. Every day.
Like I walked in, but I've never been, motivated enough to even put in like $10 or I never placed any. I don't know. Like I watch my friends play. Yeah. I don't know how to play any of the games.
You just put the money in and then do the things. And
what's that thing called?
Slots?
Yeah.
Slots is easy,
but I don't think I've done that either. There's
card games.
Yeah.
That's interesting because I mean, a lot of people would consider, especially if you're uneducated, you go to the stock market, it's basically gambling in many respects. Obviously, when you're educated and you know what you're doing, that changes the dynamic. But it's funny. You think, and it's similar for me. Like I also section them off too. Like, but we're the opposites. Yeah, it stresses me out, the stock market. It stresses me out if I'm looking at it too. If I'm got too much money in there and I'm trying to do something over the short term, that stresses me out.
Oh, okay. So when you finally started investing on your own, when you're adult, right? You said when you turned 18 or 19, the account is now yours solely. Do you just then like, what's your process like when selecting stocks for you to buy and hold, knowing that you're going to hold it for the next 10, 20 years? And has that philosophy changed over the last couple of years? Yeah,
it's definitely changed. I mean, that's the thing. I mean, I'm obviously still learning, right? You never master picking stocks. Even the greatest out there make mistakes. I don't think you'd ever have a perfect process that you can just stick to for your whole life. So yeah, over the years, it's definitely changed. And as I learn more and more, I just adapt.
Okay.
But I mean, fundamentally, I could go on for an hour about what I look for in a stock. Okay. So that would be probably a bit long. But yeah, very high level, I mean, geez, I don't even have a checklist, so to speak. Like I know a lot of people ask, oh, what's the checklist? Like, what do you look for? But my main takeaways would be essentially finding, like I said, a good business to start. Like that's like, essentially if you looked at like a Warren Buffett approach on stock market, that's kind of where I base a lot of my beliefs off of.
Okay.
I do lean more value-ish as well, more value investing style, if anything. But yeah, it starts with just like identifying a stock that I think is a good business. And there's many ways you can categorize that, like, moat, who's running the company, obviously the numbers, you can look at how they're growing and whatnot. There's a million like fundamental metrics you can look at, and then you got to marry that up with the price and whether it's looking attractive at the moment, because I always have my watch list of stocks, of however many stocks that I would ideally love to own. But most of them I don't own. Like that's kind of the fun of a watch list is I have all these stocks like, hey, this would be great. But yeah, it's different than people that say, oh, I love Tesla, so I'm going to go buy Tesla. Or I love Apple, I'm going to go buy Apple. I may love all those companies, but I'll wait till I find a price that I think is attractive enough for the long term.
I see.
And that's where I guess, I mean, there's a million resources I could use to help identify that. But yeah, it's kind of a big patient waiting game. And there's like been a lot of scenarios where there's been a stock I've been monitoring for years, like literally years. And then it's like finally at a point where I'm like, oh, like let's say they have a 40% sell off for whatever reason. Oh, now's the time.
I see.
I think I want to own this. The company's still great. The company's still going to do well over the next 20 years. But it's about being a little bit pickier with the entry, I guess you may say.
Okay, I see.
Is my approach.
Oh, interesting. So a list of stocks on your watch list that you want to buy at some point, as long as they hit the price level that you're looking at.
Possibly.
Like has to be attractive. Like, are you looking at PE ratios
all of that, yeah.
Oh,
Exactly. And I would say that's one factor too, right? Another thing to consider, like, do I already own X? Like, if I look at my portfolio, I already have X amount of tech stocks, X amount of telecom stocks. As much as I may want another one, it may not make sense relative to the overall portfolio.
Okay.
So that's one thing too. And then obviously you can go crazy in terms of like buying stocks. And then before you know, you have 30, 40, 50 stocks. That's unreasonable and unmanageable as well.
Okay.
So there's the actual independent, you could look at the stock in and of itself and say, is this a good buy? Yes or no? And then you kind of look at it from like a portfolio management standpoint and say, how does this fit into my portfolio? Does it even fit in there? And together those kind of, you come to a conclusion. Like I said, there's no like, I wish there was a checklist that I could just say yes or no, but it's like kind of a dance around all these pieces, and then sometimes they make it in, sometimes they don't.
Like you look at a weighting and allocation as well.
Asset allocation, exactly.
I think my investment portfolio taught me like 90% tech growth.
There you go.
Probably.
Well, hey, maybe that works for you. And again, maybe it's the traditional background I come from, but if a client came into our practice and had $1 million from a business and they were 90% in tech, like we'd get our heads chopped off.
Right.
So
that's too aggressive.
Too aggressive. Again, for most. I mean, maybe for some, maybe it's not. But being very conscious of the different sectors and not just being diversified for the sake of being diversified. But obviously during different economic periods, certain sectors tend to outperform, underperform. Being able to like massage that, right? You kind of have like a base allocation, if you will. And then you can manipulate that and massage that. But in theory, the goal is to like, and again, it gets back to what I talked about earlier, where like, I don't want to be checking my portfolio every day.
Yeah.
If I structure my portfolio in such a way that it is so properly diverse. Whatever happens over the next 6 months, year, like there's a war over here or this president's here, it shouldn't really matter, right? If you're owning high quality companies in the right amounts relative to each other, it's like a kind of future proofing your portfolio kind of thing.
Do you think it's possible to be too overly diversified that you get so average returns?
Absolutely.
If you want to be that diversified, just buy the index.
Well, there you go.
Yeah.
That's such a fair argument.
Yeah.
And I think my take on it is that the more convicted you are on a particular stock or a sector, even let's say tech, for example, or Tesla, whatever your favorite stock is, I mean, the more you diversify, the less returns you may receive, right?
Yeah,
You're
for
basically
sure.
like, it's a safer way of playing it. And there absolutely is a tipping point where there's too much, right? Diversification. I think when you have an investor who really knows what they're doing, so the more, I guess, educated they are, if I saw their portfolio and they had, let's say, like 5 stocks, a quite concentrated portfolio, to me that shows that they have very high conviction in such and such stocks.
Yeah.
It could also be crazy if they don't know what they're doing, but somebody that, the more convicted you are, and often the more educated you are, the fewer stocks you can hold, right?
Yeah.
You take fewer bets and you make bigger bets, and often the reward is bigger.
Yeah.
But for the average person, I mean, one thing people, like, it's funny when people come to me and say, oh, you have a YouTube channel, you must be an expert. I'm 28. There's never claim to be an expert. I'm just trying to be your average person who does like investing in stocks. And again, for my lifestyle, I prefer that more diversified, easygoing approach.
Yeah, more passive.
More passive,
well.
more hands-off, exactly. Because again, I don't want to be as involved as maybe some people do.
I'm actually learning quite a lot from Brandon's investing strategy. What about you? Do you have any questions for Brandon? Feel free to leave them down below. He'll be answering them below. So the portfolio you have now, your investment portfolio, how long did it take for you to build up to this point? And have you sold any stocks since then?
I definitely sold stocks, and
Okay.
not as often as buying stocks. Like I buy way more stocks than I sell, but over the years, of course, you sell stocks. And I remember even, I think it was a couple years ago, I had to buy a home. I wanted to buy a home. I didn't have to buy a home, but I wanted to buy a townhouse. And the price of homes here. So I had to look to my TFSA. That's where I decided. So I actually wiped it all out to put towards a down payment. So, I mean, that was a very sad day because I had been building up my TFSA for years, and, it's like your little prized little possession. And then, but I needed to come up with the money. So I've sold that, and I'm working on rebuilding that up. But yeah, I mean, I've been technically building my portfolio since I started investing when I was young. Obviously, the dollar figures, like when I say I started when I was 10 or 11, like they're so marginal that it's like not even worth
of course,
laughing at. It's 10, like 25, it's literally $25, whatever it is. But I think it is important to get into that habit and doing that over years and years and years and years. But more recently, I mean, obviously I take it more seriously. Actually, right now is a really tricky point because interest rates have gone so high, and then stupid me on variable mortgage. Freaking,
oh no,
you don't even want to know the mortgage rate. So like, I mean, my mortgage like more than doubled in the past year and a bit. And basically, I mean, I was paying $3,500 a month for my mortgage originally, which is like already okay. That's a good chunk. Now it's up at like 7,000 something per month. So you can imagine how stressful that is. And
can you write off some of the interest?
For my house, no. I do have a rental condo too, which that one obviously you can.
But you work from home.
But I don't really work from home.
Oh,
but,
you don't?
yeah, for my townhouse, that's my home. I do have an office as well.
I see.
So that obviously I do separate them. I guess you could argue I do stuff at home. So there you go. Maybe give me some ideas. But yeah, anyway. So what I was pointing again there is like it's not fun getting your mortgage rates doubled. Like there's a huge strain on your cash flow.
Yeah, for sure. So
what's actually been sad is over the past little while, I've been putting less and less money into my investments. I've been trying to pay down the mortgage faster because actually what I'm doing, like I'm paying, are you on a variable mortgage? No. Okay, well, good choice. Because basically I could be paying less and then it just extends my amortization period like forever. Like it literally would be 100+ years. And essentially never pay off the term of the mortgage would essentially just go on and on and on. You're essentially just paying interest. And that was something I could do and just like rent from the bank, if you will, but it's just, it makes no sense to me. So I've in fact not only kept up my normal amortization period, like I've increased my mortgage payments so that it still pays over the normal time. I've even gone beyond that because I want to pay it down faster.
Oh, I see.
And that's just due to the fact that interest rates it's a guaranteed return if I do that. And the stock market right now, I mean, even right now, it's a bit unsure of what the shorter term holds at least.
Right.
But it sucks.
Yeah, it sucks.
It sucks.
What would it be like if you switch from variable to fixed right now?
Right now I could, but I don't think I'd want to do that.
I think that's 6% fixed.
You
right
certainly
now.
could. I think that's probably
Yeah,
about the
or
range
5,
it is.
Yeah.
But I'm fine with just doing variable going forward. I feel like the suckers get scared at the top and then they want to lock in the face. Is that what you did, sir?
I never went on variable.
Smart.
Rate, but
yeah, no, it's like I remember seeing like literally the bank called me. This was maybe a few months ago, but they called me and said like, "Oh, do you want to lock in your rate? You know, do you want to fix your rate?" Da 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 da. I'm like, why are you calling me to fix my rate? Like, I don't need you to like. It got me suspicious, right?
I'm a financial YouTuber. I know I'm talking about.
I'm thinking if you want me to fix my rate at this percent here, like, I mean, they're doing it because I think it's in their best interest. They're trying to make as much interest as possible. And if they're going out calling everybody to go fix their rates, it's a little sign to me. Maybe if I can stomach the cash flow strain now, I mean, hey, who knows over the next few years or couple years, but I think. Hopefully we see the rates come back down.
Okay.
Yeah.
So I guess now that you own your home and you have a rental property. So now that you own your home and you mentioned you have a rental property, is that a much bigger allocation than what you have in the stock market? Just by nature of the way things are in Vancouver.
By nature. Yeah. It's not what I want. And that's like, to me, I've always wanted, my stock market to be bigger. But you nailed it. Like, if I want to have a home here, even rental aside, like, even just my current townhome is just, the prices are so expensive. If you want a place here, a lot of your money gets tied up there. So yeah, technically you call me a real estate investor. More money in real estate than stocks. Not what I want, but that is how it is.
But I think percentage-wise, your stocks are probably gonna do better than never really know. The real estate in Vancouver can go another 50%. Who knows? But
that's the thing. I have no clue what to expect. And it's like I juggle with that question all the time because with the stock market, at least if history has told us anything, I kind of know what I can expect. Right, based on how I've structured my portfolio. The real estate market here, I have no clue. Like it's already so expensive. Can it keep going up? What type of returns can it get? It's difficult to know. But
is there any individual stocks in your portfolio that you think was a mistake investing in?
Yeah.
Okay. We can talk about your favorite, your biggest wins and biggest losses too. Don't worry.
Don't worry. We don't have to talk. We can talk about the losses.
Sure.
It's no, it's fine. It's always such a good question. But yeah, of course, I over the years had obviously stocks that have sucked, and even right now I have stocks in my portfolio that have sucked. I do every once in a while buy some small caps.
Oh, you do?
Every once in a while.
Oh. And they what happened to the McDonald's, the Brookfield, the TD Bank?
That's one side of the story.
Caps? What?
Well, if you let me finish.
Okay.
They've always bite me in the butt. They've always burned me. And obviously, I just limit a very small portion. Again, this goes back to the portfolio construction aspect. If I'm literally allocating a couple percentage points of my entire portfolio there, it's like a couple $100, $500, $1,000. So
that's
nothing meaningful.
Okay.
But no, and literally, I think in almost every case, I've like lost money. So it comes to the point where like, why am I even holding this? I mean, the one I have right now, I think SoFi is one of my kind of
SoFi. Okay.
SoFi is one of my duds. I think they picked up a little bit as of recently, but I'm looking at that in my portfolio. I'm like, why do I own this? Like, this doesn't belong here. But
did you buy in 2021?
I bought it probably around 2021.
Okay.
Yeah. So
that's when all the
meme stocks are going well.
Yeah.
So exactly. So down pretty bad on that one. But obviously the biggest duds in my portfolio are like my Chinese stocks. I'm like super optimistic on China.
Okay.
I mean, I'm not trying to say China, but Chinese stocks in particular. I do actually think.
Like, are we talking about Alibaba?
I own Tencent and Alibaba.
Oh, okay.
Yeah. So, and I even own another one actually called Anta Sports. I don't know if you know that one. AMPDY. Very lesser known, but they're basically a big athletic wear company. So Nike of China.
Oh,
yeah.
Okay.
So those are my three Chinese stocks, and I've held them really since like Anta Sports I've held since like 2017. Tencent I've held since 2017. So quite a while. So I've rid some like big ups and big downs.
Yeah, the Chinese stocks are so volatile.
So much volatility.
Yeah.
Like not for the faint of heart. And that's why I say like when I'm a more a hybrid investor, it's like I have a lot of boring stocks, but I also have some to me that's a quite volatile stock, right? Not like a Bitcoin or a small cap, but they do move like that, honestly, because I'm down pretty bad on those.
Right.
I think down close to 30-40% right now. But that's okay. It's I am actually I'm more optimistic than most on China as a country, as a nation over the next couple decades. And I think these companies are, especially Tencent, I really like. It's a massive, massive company.
They do like a lot of gaming in China, right?
They do everything, but yeah, gaming, WeChat, video
WeChat,
streaming, everything they do. But they do all gaming as well, like League of Legends. Yeah.
And do you hold those stocks in kind of like your TFSA?
It depends. It depends on what. That's another thing when it comes to your portfolio. Like, you know, TFSA, RSP. There are arguments to be made about which stocks should go where, whether they're dividend stocks, U.S. paying dividend stocks. For the most part, I don't get too picky about that.
Okay.
But I do typically like to hold my U.S. stocks in the RSP, for example, like especially if it's a U.S. dividend stock because of the withholding tax.
Yeah.
You actually get to bypass that. There's a treaty in place. But that said, I'm also completely fine with holding a U.S. dividend stock in my TFSA. A lot of people would like say, oh, I'm never going to do that because of the withholding tax. And to me, that's just like, it's not the right approach. It's good to be aware of that type of thing, but like that shouldn't be the reason why you do or don't invest in a company, right? So for example, there's a stock here which is like an amazing U.S. stock and it pays a dividend, and you're gonna say, I'm not gonna hold that in my TFSA because it pays a dividend and because there's a 50%. That's the wrong. You're looking at it the wrong way, because if that's a stock that's gonna be a 10xer for you, who cares if there's 15% withheld on the dividend? You know what I'm saying? So it's not like a law, but there is preferential placement of where you put them. So I think I own the stocks in my RSP.
You guys know that on this channel, I always encourage you to diversify into areas outside of trading. And another thing I also ask of you is to smash your like button. What are some of your biggest wins as an investment? I guess any individual stocks that you think you did like the best on?
It's a good question, and it's probably a very different answer from a lot of your guests and even you, because it's unlike a trade where you can say, hey, I made this much or I've profited this much, like I've entered and exited. I mean, some of my biggest wins, if you look at my portfolio, like I think Apple's up like 300-something%.
Oh, wow.
Amazon's up quite a bit. And that's not like from anything special. That's just from holding it for a long enough time. Just literally buying it and holding it for a long enough time. So it's not, and those are unrealized gains too. Like in theory, if those companies go bust tomorrow, they're gone.
True.
So they've done well, and it's kind of like that snowball effect. And to me as an investor, it's like, I'm not trying to go for wins over the short term. Like a real win would be 20 years from now, I look at my portfolio and everything's just snowballed into something so much bigger. So it's a really delayed gratification type thing. But yeah, I don't even classify like the word win like a trader would.
Because they're not realized.
Not realized, and it's also not fast and exciting. In fact, it's quite the opposite. It's quite slow. Some people can do options, or they can go pick a good stock and make 300% really fast. It's taken me years to make 300% on such and such stock, right?
Yeah.
So it's nothing really to be too excited about. But I do believe that I'm on the right track and I'm doing what I'm supposed to do. And over the next 20 years, I'll be able to look back and say, okay, well, that was a big win that I bought the stock early enough and held it.
So since you have a lot of experience working with investors of all different ages, how would you recommend someone to invest in their 20s, 30s versus much later on, let's say in 40s and 50s?
From an investing standpoint? Well, I think in terms of the actual investments, that's very, whether it's ETFs, whether it's stocks, that's more preferential, right? That's like a personal preference. Do you want to be hands-off and passive, or do you want to be more active and involved? So that's like based on the individual person. But if you're going to break it up between different age groups, I think the better question to ask is like, your like risk, like how much risk are you willing to take? What's your allocation going to be? How are you going to structure the portfolio, and what types of investments will you pick? Like on the more growth side or on the more conservative side? Probably what you'd expect. I mean, in your 20s, why not go for all out growth, pretty much? I say all out growth, not like reckless, stupid, meme stock growth.
Why not?
Well, I mean, you could. I guess in your 20s, go for it. You probably don't have that much money anyways. But to me, sure, you could do the meme stocks. I still think it's like start that base for your future with a good portfolio, something diversified, like obviously an index fund or whatever. you can honestly leave that for quite some time, like up until even your midlife, 20s, 30s, 40s, maybe when you're kind of like really kicking life into gear, like kids, family, mortgage, you need a bit more security. You could start to kind of maybe take some growth off the table and go for a little bit more balance, like whether that's with like some fixed income, cash or bonds, or even just something more like income focused.
Okay, like dividends.
Yeah, dividends. Yeah, for sure, dividends.
Okay.
And then it's really when you're like starting to approach retirement or whenever you're going to stop working, that's when the real big shift has to come, right? Because you've been growing your portfolio all these years and decades. Now you have this big pool. It's like, let's structure that for A, so we don't lose it, and B, so that we can spin off income like every month, typically, if you're actually going to stop working. And that's when I guess you could get, more conservative, but so hard to put a blanket answer there because like we worked, in our past, we worked with people 60, 70 who were like quite aggressive and quite, they wanted to own the tech. They wanted to own everything. And then you have young kids who are like just super scared of things and they just want to not put their money in a growth area, weirdly enough. But I guess that is like kind of a blanket transition. But
so I've heard some people who have a sizable investment portfolio in stocks. What they do is they eventually they borrow against the investment. So that works well. Well, I would imagine. I want to hear your thoughts. In a lower interest rate environment where their investment keep on growing and they pay the interest and they just take out whatever is borrowed and live on the loan essentially. What are your thoughts on that? And what kind of people would you recommend that for?
No, I think that's a very fair consideration. And I think it would certainly be more favorable in a low interest rate environment than not because just borrowing costs. But that's something that actually I don't have a whole bunch of experience, that particular strategy. I can't say I've had experience working with that. I mean, logically, what you said could make sense.
Because if you sell, you get taxed, right? And if you borrow against it, you're only paying the interest rate. So hypothetically speaking, if you believe in those investments will keep on going, even after I'm ready to retire, they can keep going. I don't want to like miss out another 20, 30, 50% when I'm retired. Let's say, and then if I still have to pay, a lot of tax, right? So
no, it's a fair thought. I wish I had more to contribute there, but
maybe I'll ask your dad and see what he thinks.
I feel like he'd have a good answer for that. Yeah. It's a really interesting
because there's only a couple of things certain in life: death and taxes.
Right.
So it's like,
True.
Yeah. So let's talk about your YouTube channel now. You have now over 200,000 subscribers now, right? I remember that. Yeah. When I first started my YouTube channel, I was like, oh, there's not a lot of other finance YouTubers in Canada. You were one of the only ones. Yeah. So what made you because you were in the traditional finance space, being an advisor, working in wealth management, what made you decide to kind of pivot? Because am I right? Like you eventually quit, right? Being an advisor. What made you decide to do such a big jump?
Well, I mean, first of all, I've always loved video creation, which is one thing, right? If I didn't like that and like, then YouTube would be probably not for me. But I think the honest answer was like, as a 20-year-old working at my dad's firm, I didn't like talking to the old people. Like, sorry, old people.
To the wise
experience,
people.
Wisdom. We'll call it what you want. But and like, don't get me wrong, they were like the nicest people. Like his clients were like just like literally like the nicest families. But I'm just like, why do I like? I'm like a 20-year-old. I want to like play video games, do all this other stuff. I'm like, I don't want to be doing this. But I did think the information was valuable, and that's why I thought, well, YouTube is this platform where I can then broadcast that out to like however many people. And I saw people having early success on YouTube, again, mainly in the States. So I'm like, why don't I try to do this? Take the Canadian focus, kind of try and capture that market. And that's kind of the reasoning why I started it. It was just, I guess, as a millennial. I think I'm like right at the end of a millennial. I'm not quite a Gen Z, but like I'm still a millennial. But it was just more my nature to like do something digital. And again, like you think about it, not long ago, like this whole finfluencer space like wasn't really a thing. Right?
It got really big like 2019, 2020, I think.
Like literally. And now it's like a legit thing. And there's so many people that are just want to do this, and it's like careers and everything. But at the time there was like, I kind of had a feeling there would be an idea like this, like a space like this, but also not entirely sure. I saw like just like the start of it with some other people in the States. So I was like, oh, doesn't hurt to try. And then, committed to it, and just, 5 or 6 years later, like, we're still here. So,
Yeah.
so far so good.
Okay. Was it difficult telling your dad that you had to quit? Or like you wanted to quit?
Nah.
It wasn't.
My dad's too nice. Yeah, I don't know if you
Oh
met my
my
dad.
god! Oh, Mark.
He's too nice. He's like too nice. I tell him he's too nice.
He didn't like make you stay.
No, he at first he was super like, typical older, baby boomers, like, oh, I don't know, like what you do, like, the typical stuff. But once he started seeing the traction and the revenue, the money started making after a little while, it just became more and more real. And it's like, oh, well, maybe there is an opportunity here. So yeah, but never anything but supportive. Like I said, his goal would have been for me to take over the firm, but I made it very clear to him very early on. I'm like, I don't think this is what I want to do. Like sitting in an office, like, you'll never catch me in a suit and tie. Like, this is not a thing. I
always see you in a t-shirt, and you guys cannot see this, but he's literally wearing Crocs.
It's this same t-shirt. So like, I have 2 t-shirts. They're from Lululemon. So I have this one and then my gray one, and I kind of cycle between them.
I hope you wash them
every once in a while.
Did you wash that shirt yesterday? No wonder it smells.
It smells fine though. It smells fine.
Okay.
But yeah, so that corporate life was just not like that whole corporate. And it's not that it was a big corporate business. It was a very cool family office, but it just still wasn't entirely for me. And I just thought, oh, maybe YouTube is a pathway more up my alley. Yeah. It's kind of the thought process.
Yeah, but if you kind of think about the 2 different career paths in terms of the impact you could have and the value you bring. Yes, you bring a lot of value working in the firm, but we're talking about like 20, 50 clients.
Literally.
On YouTube, you can reach millions. And so I think if we're talking about like, how much value you can bring to society, in that aspect, you definitely do, you can reach way more people and educate people about investing, all the Canadians, US Americans, about investing in much better way as a YouTube channel, doing a YouTube channel.
You literally nailed it. Yeah. That's like big facts.
So is your dad proud of you now? Well, he works with you.
I'm proud of him. Yeah. So
You're proud of him.
I'm more proud of him for an older guy that's gotten onto YouTube because, yeah, basically, like, long story short, it actually became full circle. I said, think about this. I was kind of like, he was like my mentor, and I learned from him, and I was working for him. He was my boss.
Yeah.
Like, literally my boss paid me and got in trouble, all this stuff. And I ended up branching off to go to YouTube.
Yeah.
And then I recruited him to come do YouTube, and he ended up selling he sold his firm in 2021.
Oh, he sold it?
He retired, yeah. So he basically retired from the traditional life to do YouTube because, and so yeah, it came full circle. And now he works with me. So I'm actually extremely, I know he's proud of me, but I'm extremely proud of him for adapting to change and just taking on a new project at that time. Like, and yeah, it's for a good reason. Like, it's making an impact. And I think that's what really drives him. Like, he just genuinely wants to help people, and he can help so many more people. So yeah, it's just a funny dynamic how that worked. But basically how it works, like, with the whole compliance and like regulations here in Canada, it's quite weird. Like, when you are a financial advisor, like, for example, when I was 20 and when I was working for my dad with Manulife, so Manulife was kind of like the back end.
Okay.
We use Manulife.
Yeah.
I could not make a YouTube video or a tweet or a Facebook post. Like, I couldn't say anything about investing online without getting their compliance approval on it. And like, how slow these people move. They're like dinosaurs. It's like, send something in. It's like a week later, like, revise it. Like, it was ridiculous.
So were all your videos compliance approved?
Well, for the first few years that I worked with my dad, I wasn't doing YouTube. I was genuinely just doing this. Like, I was like, I want to do something else. I have a plan to do something else. But yeah, like, right when I started working for him, I didn't do YouTube. I also didn't know enough. Like, I wanted to learn at least a few years under his like guidance, right? Because the coursework, it gives you so far, but like, you learn from actually like working with the clients and like managing the portfolios.
But did you have to give up your license to make YouTube
so
videos?
That's exactly it. So that's what I'm saying. So I made it was a pretty pivotal point where, like, after a couple years of working for him, I'm like, I want to start this YouTube thing. I want to give it a try. And I had to give up, like, literally, it's called surrendering your license. You have to surrender your license to go even make a YouTube video,
to even tweet on Twitter,
to literally make a tweet. And I'm thinking it's ironic because I understand it, because, like, let's say, for example, like, we were licensed with Manulife, and let's say I go say a bunch of stupid stuff, like, go buy this, go do this, go buy Dogecoin, whatever it is, and then people get mad. It could reflect bad on Manulife if I'm like a registered representative for Manulife. That's why they need compliance approval, right? So if they're the firm, if Manulife is here, they want to know all their advisors are doing they're not doing anything out of line. So that's why if you want to have like a, extra activity or actually called an OBA, you need to get their okay on it and everything pass through compliance. So yes, I had to basically make a choice and say, I've done all the studying, I've been working here, but I want to try and pursue YouTube. I surrendered my license, could create whatever I want. Yeah. And then, like I said, in 2021, my dad decided to do the same thing because he
he also surrendered his license.
He sold his business, surrendered his license, exactly. So when people ask you, are you a licensed advisor? Right now, I'm not. I was.
But you were.
But in order to make YouTube videos, we had to give it up. It would not work.
Is that a Manulife specific thing?
No, that's everywhere. That's
really? Because I'm pretty sure there are some other licensed.
Yeah, well, in the States, if you're looking at the States is different. Because I had a million conversations on this. We talked with everyone we had to, but
in the US,
in the US, it's very different. It depends on how the firm is structured and who's overseeing it. But they're very, very picky.
Wait, but how does that channel, the bagel guy?
Plain Bagel?
Yeah, he's licensed. How does he make YouTube videos?
They get approved by compliance, I'm sure. So that's what I'm saying. You can get them. Let's assume I wanted to make a video. I still made videos actually when I was with my dad, but I sent them to compliance. I waited 2 weeks. They said this is good to post, and then I posted it. And that's what I'm saying. If you look at like Plain Bagel Richard, who's like freaking awesome, he doesn't post videos every day. He's not posting stories and shorts. He's like posting like video probably every month, which I'm going to assume he got vetted by his compliance team.
Oh, I see.
So it's doable, but it's like if you're going to be a full-time content creator, it's unrealistic.
See, this is why you should be a trader. You don't have to be licensed to be a trader.
There you go. Yeah. Well, maybe in another life.
Yeah, a lot of people ask me, do you have like a finance background? Or is there any education in college that will help with trading? No. If you're trading, swing trading, technicals, momentum, or doesn't like those, I'm sure it helps, but you really don't need any.
You learn from the
financial
streets.
background.
You learn from doing it.
You learn from the streets.
Literally,
and the streets are rough.
Right? I can imagine. That's why I don't.
There's blood on the streets.
I don't go to those streets. I don't like those streets whatsoever. Stay away.
So I know your channel mostly talk about investing, but do you have viewers who also trade? And like, what are some of the biggest misconceptions you see from your viewers when they are like first approaching the market and mixing trading with investing?
It's tough to say. Like, I don't have a really good pulse on what percentage of them do trade and don't trade. Of course, there are.
Yeah.
I would say actually more commonly what I do know is that a lot of people come to us and they've tried trading first and it hasn't worked out. And then they are saying, well, now I want to learn how to invest.
Okay.
So I'm sure that, like I said, I'm sure there's a lot that are doing both, but more commonly what I see is, I tried trading. I didn't know what I was doing, lost some money, yada, yada, yada. But now I'm looking to structure something for the long term. And that's actually like a big part of my audience.
Oh, okay.
So they have dabbled before, even dabbled more so than I have.
Yeah.
But for whatever reason, maybe they didn't have a good experience. Maybe they lost money. Maybe they didn't want to commit the time that it took to be a successful trader. Didn't work with their lifestyle. They then say, you know what, I'm just going to like give up and just park my money into long-term investments.
Oh, interesting.
Yeah.
For me, it's like if I also started out with like swing trading or like trading around. I thought I was investing. So I was that confused trader / investor.
Yeah.
But if I didn't trade, then I wouldn't have had the capital to invest. Like investing with $1,000, it's not like we're talking about $100, maybe a month. Then eventually I have $1,000 to invest. That's tough. Like that's why I think that's the reason I feel like if you have a little amount of money, I'm not saying you should trade, but I'm just saying you should use that to invest in something like a skill or education that can help you make more money. Then you have something substantial to invest with. Yeah. Because I'm just thinking like I didn't really invest until I kind of started having like more steady income from trading and my job. Yeah. Because otherwise it would be like $10 a month.
I can agree with that. I can agree with that. I guess I'd spin it back on you and say like, what about for a lot of the people that maybe don't have the opportunity to like, maybe they don't have the time or they have a family and they're just like being an entrepreneur or like doing the side hustles, like not a thing. Like it's just, that's not happening. Should those people then not invest? Or is it still like the best option they have? Because I'd assume also trading would take a lot of time to learn and a lot of commitment. Yeah. To me, it's like, even if I do totally 100% agree with you that if I had a smaller amount of money and I was like young and 20, if I was like in my late teens, like rather than just saying, oh, well, I'm just going to park it all away. Like I would try to learn a skill and try to make more money. That's actually what I would personally do. So I 100% agree with that. But there is a big portion of the population, which like maybe that's just not in their personality type to do, or the situation because they have family or work or constraints. And for those people, hey, maybe they want to learn trading in their spare time. But if they don't want to do that, I do think like resorting to investing, even with smaller amounts, it does make a difference over the years, compounding. And obviously differences, like different people need different money when they get older, right? So for us, we may be striving for such and such amount. For this person, they may be striving for this amount. For this person, maybe even $400,000 at retirement would be like a huge boost. So even the smaller amounts, they can go a long way when you do compound that long enough over long enough times. So yeah, I think that's my approach at least.
Okay. Makes sense.
Yeah.
No, I don't think there's right or wrong answer. I think it's
true.
just up to everyone's own preference.
Exactly.
Yeah.
Exactly.
Yeah. I know some people who take that $1,000 and go to the casino.
Right.
Yeah.
There
So
you go.
it's like, which one's better? Probably investing that is better.
Exactly.
Yeah.
Exactly.
I know we talked about earlier that when you first started YouTube, there wasn't a lot of investing information online. Nowadays, it's almost like there's too much information.
Right.
So whether you're a trader or investor, like for you, you will have investor coming to you. They get overwhelmed with like where to start, where to start building their wealth. Where would you recommend people to start investing and how?
Well, geez.
And like, I guess people want some simple step-by-step process.
Some simple step-by-step process.
Yeah.
Well, I think you're exactly right. There's like way too many things nowadays, which I think is a blessing and a curse because in my opinion, now you have so many options to choose from, right?
Yeah.
I think it's a good thing. Like, I think even between you and I, we have different investment styles, we have different personalities, different people resonate with different people.
Yeah.
And to me, if I was like a first-time investor, I would want to find some creators because they're the most enjoyable to watch. They may not know everything the best as an expert, but they're still enjoyable. And that's like step one in terms of like getting yourself into the space, or you got to start hearing the lingo and just getting yourself engaged in the field. So I think the fact that there are a lot of different creators and a lot of blogs and news sources out there, like if you can find somebody that you trust and hopefully they have experience, like someone who's been through it and they're transparent, I think it's a good idea to start at least listening to them, not saying blindly follow what they say.
Yeah.
Listen to them for a while and get a sense and just kind of start to pick up little things here and there. And I mean, that's to me, YouTube is a really cool place where like, even amongst like us creators, there's like a million, there's like so many, just pick and choose who you like. And like, oh, I like this from this guy, I like this from this guy. Yeah. To me, it'd be so fun to just be like listening. Like if I do understand it's overwhelming and I guess some people do make it is quite complex, especially when it comes to like certain areas of the stock market, but there's a ton of beginner resources out there and channels to follow. Yeah, there's
because they don't teach investing in school.
No.
Yeah.
No.
I remember Googling how to dollar cost average.
Right.
What is that?
Right.
How to buy a stock.
Yeah.
Yeah.
That's like everybody, right? Unless you have maybe friends or family that really encourage you or help you. It's just like you hear that all the time with everybody.
Yeah.
And then you see a lot of people out like on the streets. You meet friends, you're going out. Like a lot of them just don't invest.
How many people do you see on the streets?
Every day, lots of people on the streets. Yeah, depending on what street it is. Busy. Yeah. There's some busy streets, but I guess I'm saying when we're out with, let's say, a friend or something. I mean, still a lot of people in my age group, they just don't invest. Like it's just foreign to them. It's just not a consideration. Trade or invest. It's just different. Like it's crazy actually.
Yeah.
So yeah, I think it's just getting yourself initially exposed to the area somehow. I think that's step number one.
Yeah, I have so many friends. They're like, oh yeah, I contributed to my TFSA or RSP. I'm like, okay, what's in it? Like, I don't know. It's just in my RBC TFSA account.
Cash.
So it's in cash.
Cash.
So it's like, I think, people need to know it's good that they're putting money away, but they need to put it to work too. Yeah.
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 And it starts with the education, right? Like it starts with, it's not their fault that they don't know. Like you said, it's not taught in the households, not taught in the schools. You have to like actively go out of your way to learn it, and then it's also for a lot of people not like a necessarily exciting field unless you're like a dork or a nerd.
But I think that's where on YouTube the finance influencers make it fun to start learning about investing.
I think so. I think that's definitely it's starting to bridge it, right? It's better than like, you know, sitting in front of a lecture hall or like some guy going through a PowerPoint. That would certainly be very, very dry. So I think, I mean, even think about the content you produce is like, it's fun, right? I try. Look at your shirt. It's so kind of fun, you know? It's like, you know?
This is like my best investment of the summer.
Nice.
$20. Everyone loves it.
I love it.
Pops up in front of the cameras. And
perfect.
So after hearing our conversation just now about trading versus investing, which one would you choose to do first? Trading or investing? Let me know your thoughts down below. If people are interested in seeing what you're investing, like let's see, for me, I want to know what kind of stocks you're invested in. Where can we go see your investment portfolio?
Well, it's funny because this was actually one of the things, like when I was younger, I always, like that was something I actually wanted. Like I remember like being in my dad's office and I'm like, I wonder what this person's investing in. I wonder what this person's investing in. Just to get an idea, like just to see. And I'm thinking of like random people, like kind of almost like celebrities, so to speak. Like, you know, I wonder whoever there was. I forget who it was at the time. And obviously it's like, you can't find that. There is a very cool platform, which I'm very, very happy and lucky to be involved with. I know you're very well aware of them, but Blossom is a app. It's called Blossom Social in the App Store, completely free. Just past 40,000 users like this week. So it's like it's blowing up. And it's kind of almost exactly what you said. It's, I guess like, technology is changing so fast. Like the investment space is just like evolving really. And now there's this whole movement of social investing, which has been popular in the States and actually other areas of the world. But here in Canada, we haven't really had anything like that. So there's nothing in Canada like a social investing platform. But it's exactly what you said. Like it's a platform where people can voluntarily share what they're holding, what they're buying, what they're selling. I'm on there. You can literally see every single holding. Like you can look at my portfolio, the percentages. You can't see the dollar figures because that is a little bit invasive. And I think a lot of people probably wouldn't want to share their dollar figures.
But you see the percentages.
You can see the percentages, exactly. So my largest position is this, Tencent, Google, Apple, whatever it is. And for example, I made that purchase of Brookfield yesterday. It shows up, right? So it's traded this price, increased position by this much. And there's obviously, that's just one of the functionalities of it. But there's Blossom Social is a big part of what I'm focused on now, what I'm doing. And I think it's just genuinely a very, very good product for the Canadian market, in my opinion.
I'm on there too.
Yes.
Like I think if you see my portfolio, you probably see Apple is now my biggest weighting. I think like crazy. 20%. I was like, I need to. Well, I don't think I'm gonna sell it. But it just.
Well, my dad just sold it. We actually just had
not Apple.
Not all of it.
Okay.
He trimmed it. So we just filmed the collab. Like literally before this video, we filmed the video, and he trimmed from Microsoft and Apple. Just to take some profits off the table and get it back into that range. So it's kind of like your portfolio. If it's beyond what you want your position size to be. Doesn't mean
it's not beyond.
I need it to go
to the moon.
There you go. Then buy more.
I'm gonna borrow against it. Well, we'll see how that works. But
fingers crossed for you.
But check out Blossom, everyone. If you're in Canada, Blossom Social.
Just for Canadians.
I'm on there. Brandon's on there. You can follow us and maybe other investors that you're interested in.
Not maybe. There are a lot of other investors. So there's 40,000 people, and like when I started it a year ago or so, like I think it was just about a year ago when I joined these guys, like kind of met them and started working with them. I think there was like 250 users, so it's a pretty fast growth curve in just a year's time. So there are certainly more investors than just you and I to follow. You can follow your friends, you can follow family, and some pretty key like influencers here in Canada as well.
So Blossom Social is actually one of my investments. So it's
me too.
Oh, you too?
Let's go.
Wow! High five.
To the moon.
So cringe. No, but it's one of my, well, it's not like a stock portfolio, but Blossom Social is definitely one of my bigger individual investments as well. So I fully believe in what we're trying to do in the app and the platform. Eventually it's going to become a brokerage, and I think that's like the next step for Canadian investing.
It very much is, I mean, there's only so many in Canada. Like it's limited the options we have. Like Wealthsimple is just doing such a good job, especially to the beginner market. Like they've crushed it. But beyond that, at least on the long term and like, you know, low cost investing sphere, there's like Quest Trade's kind of like, you know, it's Quest Trade. You got the big banks, obviously.
Some shade here.
I mean, you know, like it's Quest Trade. I use Quest Trade to be
I use
clear.
it too for investing.
I use Quest Trade and TD, but I mean more so from the innovation standpoint, right? Like they're great brokerages for what they are.
Yeah.
But when you think about like this new generation of people that are like on their phones and they're young and they're like wanting to be, you know, more hip and like young. Those platforms aren't quite. I'm getting old, so
you're younger than me.
Well, no, I don't know.
What? You are.
I got in trouble. I was so at our Toronto and Montreal event. Like,
what did you do?
I just told I said something about someone being old in the crowd. I was like, oh, you know, I was listening to this old guy, and then the whole crowd is like looking at me funny. They're like, no, you don't say that. I was like, oh, sorry.
You gotta say wise.
I gotta change my.
You gotta say wise.
So you're wiser than me.
Yes, I'm wiser than you.
Yes.
Well, I try. So you are keeping quite busy now with your YouTube channel and with Blossom. What are some other aspects of your life that has kept you busy recently?
I'm very busy. Every day is busy day. So I'm trying to stay extremely active right now. Like I go through these phases. I get really like overweight, and then I'm like, hey, I gotta lose some weight, and then I get out of the way. It ebbs and flows like the stock market. So I'm very active with my physical activity, and then beyond that, I also had a daughter. So she's 1.5 now, and as you can imagine, that's also a big time filler
for sure.
Of the calendar.
Energy filler,
mental filler, a big part of life. But yeah, so it's very busy days typically.
Do you think since having her has that changed the way you invest or your approach to investing? Now that you have another human being, a very little one that you have to take care of for the long term.
It does. I mean, I wouldn't say it changed my investing strategy, so to speak, but it made it that much more important. So, I mean, obviously we did set up like an RESP, and like we're starting to think about her future and that. So she's still so early. Like we still have many years to worry about, schooling and all that. But we did put up a little RESP. We put like $50 a month or something small. So that changed from that standpoint. But yeah, I think you're right. It's just like everything becomes that much more real. Up until this point, I was investing for the sake of investing and investing to grow my money. And it's like, money's good, But now there's like real life there's real repercussions at the end of things, whether it's like the mortgage needs to be paid, we need a place to live, or we need money for food, or she's gonna need this such and such money to go do this down the road. Now there's like a more meaningful purpose to do it. So investments haven't changed, but I guess the reason for them has like certainly changed and really solidified. You might be
investing for her college tuition.
That's the goal if she wants to go to school. Maybe a down payment down the road. We have these conversations. I mean, it's like we're thinking a down payment. It's kind of like that thing, families say, ask your parents for the money for the down payment. It's kind of tacky, but it's like I want to be in a position to do that for her because it does help you out tremendously. If you have the family resources, it's like it's such a interesting like Western culture belief to like, oh, go out, be on your own, be independent. And that's what I did. It worked for me because I moved out when I was super young because I wanted to go, like I wanted to be independent and I wanted to go start paying rent and learn all this stuff. But it's also nice to be in a position where, and in a lot of other cultures, like it's normal to like be with family and support family and live with family. I'm sure you know that, right? It's like quite strange to just go move out. So regardless of what, how things end up being over the next 20 years, we want to be in a position where, does she need money or whatever it's for, we'll be able to provide that. So maybe it's college, maybe it's a home, maybe it's, we'll see. Could be anything. Maybe 20 years from now, it's like some crazy virtual world. I don't know. We don't know.
Maybe living in the metaverse.
Right. I'll get her some metaverse down payments or something.
That'll be like crazy. Brandon, where can everyone find you if they want to follow you on social media or follow your stocks?
Mainly Instagram, YouTube, and then Blossom. Download the Blossom app. But of course, as I'm sure you know, watch out for the scammers. Watch out for the imposters. Because I have to start telling, like, anytime a friend of mine follows me these days, I have to like pre-warn them, like, hey, you're gonna get someone. It's not gonna be me.
You're gonna get 5 other people messaging you.
Exactly. So I mean, I'm sure a lot of people are aware of that now. But Instagram's probably where I'm most active, even though it's like YouTube's kind of the hub.
Yeah.
So if you like want to learn and watch more of our content, learn more about what we do, go check there. But Instagram's more like I'm in the DMs and I'm more making stories and stuff. And then obviously on Blossom, I'm there every day scanning the app and whatnot.
Okay.
Thanks for having me on. That's really, really nice of you.
So that was our special interview with Brandon Beavis, a stock market investor. As a trader, I always enjoy exchanging experiences with people in other areas of expertise, whether that's investing, swing trading, or options trading. So what do you think? Who else should I bring on the Humble Traders podcast? Comment down below if you have any recommendations. And if you want to learn more about my personal investing strategies, then you can find out more from this video over here.